US stocks have tumbled as euphoria over US President Donald Trump's 90-day tariff pause faded amid continued uncertainty and his escalating trade war with China, of course. The S&P 500 fell 3.5%, and the dollar, in fact, had its worst day since 2022, as the White House said tariffs on Beijing now total 145%. New data shows that inflation eased in March. It wasn't enough to impress investors, though, who are sobering up and realizing that the US-China food fight will probably get worse before it gets better. This is what some analysts are arguing. Some traders, meanwhile, say the coast is not all clear. Meanwhile, I must also mention that some major Asian financial markets have opened lower after Wall Street stocks resumed their slide. But to take this further and for further clarity regarding the global ramifications, we have with us emerging markets expert Jeffrey Dennis. Mr. Dennis, thanks so much for making time for us. The sell-off suggests that market volatility will persist. This is what many experts are arguing, since it indicates that the US's effective tariff rate still is at the highest level since at least 1934. What's your take, sir?
Oh, I think that's absolutely right. I think the volatility is going to continue. Some of the technical guys would say that when you get a huge rally like you had the prior day, you'll always get some sort of pullback, a natural pullback of about a third. Now, this is a bit more than a third, but I think this sort of pullback that we've had today was to be entirely expected. And I think from a fundamental point of view, it was, as you've said already, the realization from the markets and from investors that although there's relief over the reciprocal tariffs being put on hold for 90 days, there is still a large number of countries, by definition, facing a 10% tariff, which is unfortunate. And of course, meanwhile, the China trade war, it just get ratcheted up. Frankly, 145% tariffs on China is kind of ridiculous as far as I'm concerned. So the trade war is not over. We had a euphoric day, we've pulled back a bit, and now I guess we're waiting to see what the macro fallout will be and to see what President Trump might do next.
Right, just to delve deeper into the 145% tariff on Chinese goods, sir, how sustainable is this escalation without triggering a full-blown recession?
I don't think it's sustainable at all. And I mean, you said in your intro that these are the highest levels of tariffs we've had since the 1930s. And of course, there are several reasons why we had the Great Depression in the 1930s. Tariffs was one of them, although poor monetary policy by the Fed was another. But I think we are in a situation now where you're going to see a sharp increase in the price level in the US because of all the tariffs for a period of time. Whether that follows through to inflation over a sustained period will depend on such things as wages and the ability of companies to pass those price increases on. But at the end of the day, it's going to simply increase recessionary trends. The Fed will find it very difficult to do anything on interest rates at the moment. Meanwhile, huge uncertainty on the consumer confidence front and also on corporate confidence. So I think the more these tariffs are ratcheted up, and we've got to see also what happens in 90 days with the reciprocals, I think the greater the risk of recession. I still believe the risk of recession in the US is probably slightly more than 50%.
In fact, JP Morgan had said that it's around 60%, but Wall Street, as we know, has just had one of its worst days this year. Is this a short-term tremor then, sir, or signs of deeper cracks within the US economy?
I think it's not a short-term tremor. I think the US market is going to remain under pressure for a period of time. I think what you need to stabilize the US market is actually an end to the tariff escalation, number one, and goodness only knows when that'll happen. And number two, to get the US economy, to get the market stabilized in the medium term, you need to know the US economy is okay.
Of course.
Now, what could they do to stabilize the US economy? Well, frankly, if the government continues to effectively put more and more tariffs on foreign goods, that's going to make it very hard to stabilize the economy.
Of course.
There is no room to speak of for fiscal action, although there is a very, very big bill going through the House of Representatives right now And of course, I think at the moment, the Fed doesn't have a lot of room to reduce interest rates. So it's not quite clear what they can do to shore up the economy, short, of course, of actually, abandoning this frankly mad trade war.
In fact, the European Union has paused its retaliatory tariffs, and the United Kingdom, meanwhile, is pushing for a deal. Many say that global partners are actually trying to sidestep Trump's unpredictability. But Jeffrey Dennis, thank you so much for joining us with your views. Really appreciate your time.